Let's start from the TWIR, the main fiscal and, let's say, tax source of regulation here in Italy. On Article 2, it's provided that an individual is considered a tax resident in Italy if he spends more than 183 days based on a calendar year, even across 2 years. Anyway, what really matters is the center of interest. For example, if your employer is in Spain, but your family lives in Italy, more likely you're considered a tax resident in Italy. Based on the Italian rules and international tax treaties in force, actually in Italy you must pay taxes on worldwide income and assets. Just to be more specific, you must report your worldwide information, applying the tax treaties in case of dual taxation. So very often, people are, scared about Italian taxes without knowing that thanks to the tax treaty, thanks to the tax credit given for taxes paid abroad, you may reduce your tax liability in Italy to almost zero in many cases. Personal income tax basis is the sum of the following: your salary as an employee, your pension as someone retired from work, your business income as a contractor or freelancer, for example, as non-professional income for occasional engagement. You may have all of them, or just a few, it doesn't matter. Your basis is the sum. And if you're lucky or wealthy, depending on how you call yourself, you may have also some passive income, dividends, interest, capital gains in general, cryptocurrencies, rental income. All those different numbers must be put in different frameworks of the tax firm. So please pay a lot of attention. In case of personal income, you must pay taxes. Depending on the source itself, it could be a flat 26% as a substitute tax. It could be IRPEF. We'll see how it looks like in the next slide. It could be a tiny percentage from 0.2 to 0.76% in case of foreign real estate, or it could be a flat 10 or 21% applied on rental income in Italy. In general, the personal income tax goes under the progressive brackets. It means that the more you make, the more you pay in thresholds. So still on the progressive basis. So please don't trust those silly people keep sharing horrible stories on internet talking about 50% flat on your income. This is the scale, the range, flow, and brackets. 23 to 43%, up to 15,000, 23%, 15 to 28,000, 25%, 28,000 to 50,000, 35%, more than 50,000, 43%. I don't say any 50%, by the way. Thanks to the same tax code, here in Italy you can pay taxes, or in other words, you apply the tax rate on the net basis. So this means you can use some expenses to reduce the gross. There are also a few special expenses they can even reduce the taxes due. So it's very important to know in advance what kind of costs you're dealing with before the payment. Here's an example of expenses that can reduce your gross income, the basis. Social Security contribution, such as those you already paid on a voluntary basis or held by your employer. It could be an Italian, a foreigner. Spouse alimony or donations to non-profit organizations. And in case you incur in some other more significant expenses, you can use a percentage of those to reduce the taxes to be paid at the end of the fiscal year. It could be 19% in case of medical expenses, educational costs, or dentist, 50 or 65% for house renovation costs. In any case, don't forget about this. You cannot, listen carefully, you cannot use negative amounts on your favor. So basically, the amount of deductible expenses that exceed your tax liability is lost forever. In case you have or you receive a foreign source of income, you must play with this guy, the tax treaty. Many of you already know what I'm talking about. Basically, it's like a detailed agreement between two countries providing for each one of them scenarios for income, assets, and how and what to estimate for the common goal of avoiding dual taxation. Taxes must be fair. That's the common sense. It's very far from simple, trust me. reading and filing your Italian taxes require the expertise and the ability to read numbers through the lens of the tax treaty, very often leading to conflicting information or missing information. In this matter, experience and expertise is everything. In Italy, you can choose. Not only if you want to have pizza, pasta, or spaghetti, of course, but also your tax regime. Just a bunch of people are aware of this opportunity simply because explaining these concepts in a different language to foreigners is very challenging, believe me. Basically, instead of IRPEF, the 23 to 43%, remember, you can opt for an alternative. Sometimes it's more convenient, sometimes it just sounds more convenient, but it's not. So you should work on a good estimate prior to find out. If you're a freelancer, a contractor, a business owner, this tax regime could sound very inviting. A flat 5% for 5 years, shifting to 15% after the for the first time break, 5 years. You're eligible if you start a business and if you don't make more than 65,000 per year. Not bad at all. This is the most famous one, the tax benefit for new residents, Regime Impatriati. You can Google it. In a nutshell, it's given to you a discount from 70 to 90% on your tax basis. So you will apply still the IRPEF brackets, but just on the 30 or even 10% of your net income. There is no income limit. You can opt for it even if you're an employee or a business owner. It lasts for 5 years with the possibility to extend it to 5 years more, so 10 years in total. 7% from pensioners, famous as well. If you're retired from work, receiving a pension of any kind, just to clarify the matter, and you move to a small city in the southern regions of Italy with a population less than 20,000 inhabitants, you may be eligible for this amazing benefit. No wealth tax due, 10 years duration, and substitute tax of just 7%. Unbelievable. Another substitute tax goes by the name of CEDOLARE SECCA. On your Italian rental income as a landlord, you can apply a flat rate of 10 or 21% instead of IRPEF, its alternative. In this case, you can say goodbye to deductible expenses simply because this tax doesn't give you any tax capacity. So, for example, if you have to renovate your property, it's the worst deal ever, unless you trade or sell the tax credit. But this is another topic. I hope that I give you enough context to understand the traps, the benefits of planning your Italian tax life in the best way possible. Planning is the key. On one side, I must say rules can seem tricky and hard to apply. The tax treaty itself is far from simple. The application could lead to a lot of problems according to different numbers, documents, timeline, and currencies. On the other side, benefits and alternative tax rates can make your Italian life a dream come true. Just think that these amazing reductions and benefits are just for expats only, so you're very welcome to enjoy them.